Hello everyone, welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Sorry about that. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And I'm also on X. My name there is at Doug Pless. Just want to let everyone know that Bookmap is encouraging everyone to join Bookmap Discord. There are plenty of benefits. I'll go over that in just a moment. You do need to subscribe to Bookmap. If you're not already a subscriber, there's a free subscription available. Once you subscribe, you will need to join Discord, verify your account, and then you can fully participate in chat and watch the streams within Discord. That includes my chat room, my stream, as well as many others. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. Excuse me. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. Certainly in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their debit exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen, Hector, RJ, welcome, glad you're here. And hello, Single Print Stu, welcome, glad you're here as well. All right, here's my agenda for today, Wednesday, November 13th. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. If anyone has any stocks or anything else they want me to take a look at when I get to the live market, please let me know and I'll be glad to do that. All right, let's get started with economic data and events. All right, today CPI data came out at 8:30 a.m. Eastern Time. Can be a market mover. It definitely was in the past, maybe not so much today. Looks like the CPI, all the different versions of CPI, came in pretty much in line. Year over year, a little bit in line with forecasts, but a little bit over previous. All right, so that's CPI data. For the rest of the week, tomorrow PPI data comes out at 8:30 a.m. Eastern Time, PPI data, and then at 3 p.m. Jerome Powell is speaking. And then on Friday, retail sales come out at 8:30 a.m. Eastern Time, and Friday is also options expiration. So let's take a look at that. Let's go to this. Let me get these out of the way. Options expiration, concentration. And this is for SPX. It'll be similar for other indexes as well. What this chart is showing is market maker delta notional on the vertical axis, expiration date on the horizontal axis. And this is the upcoming November expiration. Orange bars are call delta notional positive, and the blue bars are put delta notional negative. So you can see this is a very heavily call dominated options expiration. And typically there could be some consolidation after a call dominated expiration as those positive gamma strikes. Some of that gamma expires, so some of that positive gamma that has been supporting the market goes away. But note how small the November expiration is compared to December. And that's very typical. The quarterly March, June, September, and December options expirations are usually the largest. And you can see this is also very heavily call dominated. And, of course, already there's some consolidation going on, potentially related to the very strong post-election rally from last week. All right, so that's the upcoming call-dominated options expiration. All right, let's move on to positional analysis. I'm going to start with the S&P 500. And note this was the reaction to the CPI data. Bullish move at 8:30 a.m. Eastern Time. Found resistance in this cluster of levels with this SPY combo 1 level. That was the upper range of that move higher. Now SPX back looks like trading right around that level, the SPY combo 1 level. All right, so that was the reaction to CPI data. All right, so now let's move on to positional analysis. So again, this is the S&P 500 ES futures and Bookmap. Before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to SPX, the underlying index. This is a one-day chart in Thinkorswim going back a year. You can see the rally continues. Big rally began last week, and a slight amount of consolidation today. Let's take a look now at a 30-day 1-hour chart. Going down on time frame, 30-day 1-hour chart. Rally began on Tuesday, accelerated on Wednesday, huge gap up after the election results. And now again, this little bit of consolidation may be over, trading right around the 6,000 level. So we'll take a closer look at that in just a minute. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday after the close. I do post those levels in Discord every day the day before. So I posted these levels yesterday evening. So that's one of the benefits of joining Discord. You can access the content in the Options Doug chat channel. All right, so those are the expected moves. So far, SPX trading within both of those ranges. And again, today, up and down around the 6,000 level. So we'll take a closer look at that in just a minute. All right, let's take a look at the Spotgamma levels now on this chart. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers on a variety of trading platforms. And again, this is Thinkorswim 30-day 1-hour chart. I'm going to start with the put wall, the key daily levels. Put wall at 5,500. That's the strike with largest net negative gamma. That can be expected to act as support. Certainly not in play for today. Next level up is the volatility trigger at 59.45. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility when market makers are trading in the direction of price. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And note, SPX is trading above its volatility trigger today in positive gamma. More about that in just a minute. All right, the next level up is the 6,000 level that I mentioned before. And that is the call wall, the strike with the largest net positive gamma that can be expected to act as resistance. That's also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. We'll take a closer look at that in just a minute. That's where the vast majority of gamma-weighted open interest is concentrated. And of course, some of that gamma is going to expire on Friday. So as SPX remains in the vicinity of 6,000 and expiration approaches on Friday, that gamma will only increase. Gamma is highest at the money at expiration. All right, so those are the levels. 5,500 potential floor, again, not in play. And the call wall, the 6,000 level, definitely in play. Absolute gamma strike also, and then SPX is trading above its volatility trigger. And the volatility trigger, again, did move higher. And that's the only shift in level for SPX. And for SPY, the put wall shifted lower. All right, let's wrap up our view of SPX with a 1-minute chart. All right, let's zoom in on this just a little bit. Actually, a little bit more. So you can see the consolidation that began this week on Monday. And it looks like now SPX has broken that downtrend. And focusing attention on this 6,000 level, that's the lower red line. All right, so again, SPX trading around the 6,000 level. Looks like now it has moved above, and also above the volatility trigger. All right, let's go to Bookmap now. And let's take a quick look at the 6,000 level first, just to see how much gamma is concentrated at that level. This is the absolute gamma chart for SPX. And there's the 6,000 level. So again, that's the call wall and the absolute gamma strike. And definitely dominating the absolute gamma for SPX. All right, back to Bookmap. All right, so this is the ES chart in Bookmap. And, again, I have focused on SPX, and I like to put my SPX levels on my ES chart. There have been quite a few questions about that recently. I do use the Price Lines add-on. That's a third-party add-on available from FinTech Visuals. It's available in the Bookmap Marketplace. I'm using the latest version 1.8 that no longer relies on cloud notes. It does use a spreadsheet. I enter the information in a spreadsheet in the morning, and then it's displayed on my ES chart, and I can enter whatever I want. So I'm showing Spotgamma levels for SPY and SPX, also showing round number levels for ES and for SPY. All right, let's take a look now at some of these levels in play for today. Note I have a couple of levels highlighted. And this is why one of the reasons I use my own notes, so I can show SPY levels. I don't believe Spotgamma uses or shows SPY levels in their cloud notes. So I like to show SPY levels, and just to show the importance. This was just after the 8:30 a.m. data release. Resistance at the SPY 598.72 combo 1 level. And that's just slightly above the 6,000 call wall level. And then ES, SPX, SPY found support at the 595 large gamma 3 level. Let's just confirm that with a SPY chart. So let's go to Thinkorswim, go to SPY. I'm going to have to zoom back out a little bit. So those are the two levels that I'd highlighted. I'm using the Spotgamma Think script in Thinkorswim here to show these levels. Since there's no translation involved, this is just a SPY chart showing the resistance before the cash open, the gray shaded area right here at that combo 1 level, and the support at the 595 large gamma 3 level. So that's why one of the reasons I like to use my own notes, so I can show SPX levels, SPY levels, and any other levels that I want to. All right, note there is a difference in price between ES and SPX, and that's about 27 points today. So ES minus SPX equal 27. So I'm showing the SPX 6,000 level, that's right here, at ES 6027. There's also a ratio difference between ES and SPY, and I do post all those index relationships I'm using for the S&P 500 and Nasdaq in Discord every day in the morning. All right, so key levels. Again, the SPY 598.72 combo 1 level, and the SPY 595, large gamma 3 level support, and now ES finally moving back above the high of the pre-market just after the data release. All right, we'll talk about setups in a few minutes. Well, let's move on to Nasdaq. Nasdaq, I'm also using the price lines add-on to show QQQ levels and NDX levels, as well as round number levels for NQ, the zeros and the 50s. All right, let's take a quick look at the underlying index charts. Here's QQQ. Key support level at the 510 absolute gamma strike. And now QQQ making moving up above the pre-market high. All right, so that's QQQ coming up on the couple of levels above. We'll check on those levels in just a minute. The label's not shown here in Thinkorswim. All right, NDX. Then we'll get back to Bookmap and the NQ futures. All right, so this is NDX. Again, remember the support was the QQQ 510 absolute gamma strike, and the NDX call wall at 20,975 was around that level. And this 21,100 level, L2 did act as resistance, then support. All right, so that's NDX. Again, I have QQQ and NDX levels on my chart. And again, there's that 510 absolute gamma strike that acted as support this morning. NQ also moving up above the pre-market high finally. All right, so more about setups in just a few minutes. And for NDX, the put wall and call wall both shifted lower. Now the call wall is back above the put wall. That was not the case earlier this week. So for NDX, call wall now above the put wall, but both shifted lower. And for QQQ, the volatility trigger shifted lower, and the put wall and call wall shifted higher. RJ asked, how did you get version 1.8 for the Priceline add-on? I was only able to purchase version 1.5. RJ, I worked directly with Lewis at FinTech Visuals to test this new version. So I guess I was kind of a beta tester, and that's how I got version 1.8. You might contact support, FinTech Visual support, and they maybe might make it available to you. I don't know. Or they might update the add-on in the Bookmap marketplace. All right, I like this 1.8 version. Again, it avoids the cloud notes. I think you can use cloud notes if you want, but it avoids cloud notes. That saves me a lot of time in the morning. All I have to do is fill out my spreadsheet. I don't have to go into every instrument and start the server for the cloud notes. And then here, let me show you see, I don't even have to open this in the morning. So I have it set so that it refreshes every 60 seconds. So all I have to do is fill out my spreadsheet, save it, and then it will be updated within 60 seconds. And you can see again, this is version 1.8. And if you do contact FinTech Visual Support, tell them that you saw me using price lines. All right, so that is, and the old, thank you. And so the old version used the Cloud Notes. And you can see I have now removed that old Cloud Notes column that I have, and all the labels are displayed over on the left, and you can control where the labels are displayed. And also in the spreadsheet, you can change the index relationships, the colors, and turn the lines off and on. All right, so that is the Nasdaq now, also rallying above the pre-market high. All right, let's wrap up our positional analysis by taking a look at Gamma Notional. And I'm going to start with market maker's position on the Gamma curve at the beginning of the day. This is before the open. This is based on data from yesterday. We'll take a real-time look at Gamma in just a minute. So this is Gamma Notional, market maker's position on the Gamma curve at the beginning of the day for the S&P 500 and Nasdaq. Note all these numbers are positive but lower than yesterday. So Gamma Notional has been shifting lower this week as the indices have moved down a little bit in this consolidation. Gamma Notional, as price has been moving down, has been slightly dropping, but still positive. So in a positive Gamma environment, that means that market makers are traders are short calls, market makers are long calls, hence the positive Gamma. They have to trade against price. There's the delta exposure. All right, let's take a real-time look at Gamma now. This is the trace tool from Spotgamma. It's available to Spotgamma subscribers. There are different views here. This is the Gamma, Delta, and Charm. We'll start with Gamma. This is what I look at the beginning of the day. The blue shaded area, that's positive Gamma. And in positive Gamma, I expect, let me change this to a 5-minute chart. All right, so that's a little bit easier. Candlesticks showing price for SPX. This is SPX. And the purple line there is the hero signal. All right, so SPX has now moved up slightly above the call wall key Gamma strike, and very positive Gamma, this region of bright blue. And note there is negative Gamma, pockets of negative Gamma down below and above. So what that indicates, I'm looking for slower grinding movement in this positive Gamma. And then if price does drop below this blue zone or above, then I would expect faster movement. And Single Print Stu, welcome. Glad you're here. Thank you very much for joining me in Discord here. If you could join the stream at Discord, that would be great. Helps me out. Helps maintain this webinar. All right, so Single Print Stu does ask, with regard to Spotgamma.com subscriptions, is what you're showing from the alpha package? Yes. Yeah, Trace and Hero are included with the alpha package. And I use both tools extensively during the day. All right, so that is current view of Gamma. One other thing to note, the stability index at 92%, extremely high. Looking for really very subdued movement in an environment with such a high stability index. All right, so my thesis for the day was looking for Lower volatility today, mean reverting price action, meaning traders will buy the dips and sell the rips, and mean reverting price action, more range day. All right, let's move on now to real time, to execution. Take a look at some setups from this morning. Then we'll get to the live market. All right, so as always, I'm going to start with the S&P 500. And I'm going to start by taking a look at what options traders have been doing today. And to do that, I'm going to use the Hero tool that's available, again, in the Spotgamma Alpha subscription, available to subscribers. Again, starting with the S&P 500. So what this chart, this is the Hero signal, hedging impact real-time options. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The white line is price for SPX, and the purple line is the Hero signal. A falling Hero signal indicates traders are taking negative delta positions. They're buying puts and or selling calls, and a rising Hero signal indicates they are taking positive delta options positions. They are buying calls and or selling puts. All right, there's another signal that we can take a look at for the S&P 500. That is the equity signal. Note there is a typically, and this is typical, stronger correlation with price. The index signal is often a little bit more noisy, a little bit more jumpy, but I think can often give a leading signal compared to the equity signal. So the equity signal is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. So same lines on the chart. White line is price for SPX, and the purple line is the Hero signal. All right, let's open up full screen. We'll take a look at both of these. Let's start with the index signal, and what I'm going to focus on is this long setup that occurred just after 10 a.m. Again, with the support at the 595 large gamma 3 level and the reversal there. All right, so starting with the index signal for Hero, you can see a few minutes after the open, traders started taking negative delta positions. This flow alert comes in just after 10 a.m. It gets your attention, signaling significant options activity, and that can often precede a movement or a reversal of the Hero signal. That's exactly what happened here. Just a few minutes later, the Hero signal reverted from negative delta to positive delta, and you can see the reversal right there. And that occurred, that reversal, right around 10:07. All right, let's go to the equity signal now. We'll look at almost the same information. Flow alert comes in, signaling significant option activity and a potential reversal in hedging flow. Then the reversal here occurs about 2 minutes later. So actually it follows price. You can see the price reverses higher first. Then the Hero signal for the equities follows. So this is why, especially in the morning, this index signal is my default. And you can see this reversal here slightly, by just a few seconds, precedes the reversal higher. All right, so again, this is my default in the morning. The S&P 500 signal, the index signal in total mode. All right, let's go take a look at Bookmap now. Let's go back to ES. Let me zoom in. And we'll look at the signals in Bookmap here. All right, so there's the reversal that I talked about earlier. At the top of that was that SPY combo 1 level. And after the cash open, ES tested the SPY 597 level. That is not a Spotgamma level, but it is a SPY round number level. I like to show those levels on my chart. Acted as support. Price broke down below that level, and there was one test of that level. Then price broke lower. The volume dots in Bookmap are showing market buy minus sell. Green volume dots indicate there are more buyers than sellers, and magenta dots indicate more sellers than buyers. You can see the buyers are gone. Aggressive sellers start to come in, and price moves sharply down in high volume. You can see all the magenta volume dots. High move down. There's the volume right there. Zoom in on this just a little bit. And you can see the sellers become exhausted. You might not be able to see it, but there's a tiny magenta volume dot right there. And then slowly, buyers start to come in. Price breaks above 596. Also just a SPY round number level. Retests that level. And then price moves higher, makes a series of higher lows. One other thing to note in the subchart here, this is very typical. This rising light blue line here shows that large traders were fading that move down with iceberg orders. They used to hide their size. Very typical behavior for large traders with iceberg orders. They will bite weakness and sell strength. So they were buying that move down. So another clue that there was a potential reversal coming up. So we know there's a potential support level at the 595 level. I assume that all Spotgamma levels, when tested as above, may act as support. That's exactly what happened here. So we know large traders are buying that move down with iceberg orders. We know that sellers were exhausted. Aggressive buyers started to come in. The hero lines for both the index and the equity signal was rising. And price started to make a series of higher lows. One thing to note on this chart, this magenta line here is cumulative volume delta, and that's a pretty tepid response. So the only thing you can say about cumulative volume delta is that it stopped dropping. So this leads me to believe that options traders were really driving this move higher. Both hero signals rising, but cumulative volume delta and also this stop line, this yellow line, was not rising. And that's atypical. All right, so there's that reversal higher, again, driven primarily by options traders. There are some green volume dots, but are not enough to shift the cumulative volume delta higher. But that was a nice long setup. All right, so now the S&P 500 trading right in this cluster of levels again. Looks like just above the 6,000 absolute gamma strike call wall. All right, so nice long setup. Let's take a look at one other thing. Let's go to the trace tool, change that over to delta pressure. So this is another confirmation, and I'm going to zoom in just a little bit. I like to use more of a zoomed in view for delta pressure. Let's go. Remember that reversal was just before 1010. So let's go back to 1010 here. So you can see earlier in the day, this red zone up above, that is market maker selling pressure. And this often shows this information a little bit in hindsight, but it is showing selling pressure. And now we're more in real time for this reversal higher. And you can see that this is for SPX again, leaves that red selling pressure zone and is starting to approach that blue market maker buying support zone. So this is like a heat map. You know, we just looked at the heat map and Bookmap. Now this is a heat map for options trades, and it can be quite effective. And SPX, as it moves down, is approaching this buying support zone. So look at that like buy orders in the heat map and Bookmap. All right, so another clue of a potential reversal. Oops. So let's go forward in time again. So you can see that as I step forward in time, that buying support was building. Now at this point, SPX in a kind of a neutral zone and has left the buying support zone, approaching a level that you would expect to act as resistance. Time to exit any longs. And that was about 11:30. So let's step forward in time. And you can see as we step forward in time, now price is moving higher, still above the call wall. All right, so that's the current view. SPX finding resistance in the selling pressure zone. All right, back to Hero. All right, let's take a look at Nasdaq now. Yeah, zoom in just a little bit. All right, so similar picture for Nasdaq here. And here the reversal occurred right around 10:07. Again at the QQQ 510 absolute gamma strike. Looks like it took a little bit longer to get going than the S&P 500. Let's see what options traders are doing. Let's go back to Hero. Then we'll come back and look at Bookmap. All right, for the Nasdaq, there are two signals that we can take a look at. There's the Nasdaq index signal. And this is showing options trades and market maker hedging activity for a combined signal of NDX and QQQ. And the price is shown for NDX there. And the other signal that we can take a look at for NASDAQ is the MAG 7 signal. So for the S&P 500, at the beginning of the day, the S&P 500 index signal is the default view that I use, for the S&P 500. And for NASDAQ, the MAG 7 signal is the default that I use. So you can see, just like the S&P 500 equity signal, this is a little bit more smooth. So this is showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. So you can see the shift in hedging flow here. and price follows. Let's see what traders are doing. And they were buying calls. So the put line earlier in the day, that's the blue line, was pretty flat. Net for the day, they are selling puts. I'm going to have to jump back to avoid the auto zoom. And they started buying calls, right around 10:10 to 10:20, something like that. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. They want to remain delta neutral. Let's take a quick look at the index signal. So you can see really just before 10:30, they started buying index calls as well. Put line pretty flat. Let's go back to the Mag 7 signal, a little bit earlier signal. All right, back to NQ in Bookmap. Here's a level that we expect to act as support. Sellers are exhausted. Aggressive buyers start to come in. So sellers, magenta volume dot, again, they're exhausted. Green volume dots start to come in. Nasdaq starts to make a series of higher lows as traders were buying Mag 7 calls. Market makers sell the calls, buy stock. Those Mag 7 stocks make a very large component of the Nasdaq. Price moves higher. Looking at the subchart in the Bookmap here, you can see, just like the S&P 500, blue line showing large traders fading that move down, buying NQ with iceberg orders. Took a while for cumulative volume delta to get going. That's the magenta line, and also the yellow line stop orders. Buy stop orders helping to fuel that move higher, as well as aggressive buyers and call buyers. Let's take a quick look at some stocks. Then we'll get back to the live market. First stock I want to take a look at today is AMD. Note for AMD, 140 is the put wall. That was definitely the target today, very clear. You can see all the liquidity at that level. That's the heat map and Bookmap that I was talking about before. The heat map shows a history of the limit orders in the order book. Those are showing limit buy orders at 140, 140 put wall. They were consumed. That level acted as support as expected, and price now trying to move higher, and that level was a very, very clear target today. Let's see what options traders are doing in AMD. And AMD, they were selling calls and buying puts. Flow alert comes in just before 10 a.m. Get your attention. Signals significant option to activity, and traders continued to buy puts shown by the falling blue line and sell calls shown by the falling orange line. Price finds support at the 140 put wall, high liquidity area. And just after AMD reached that level, that's when the call sellers took their foot off the gas and started buying calls, and the put buyers took their foot off the gas. All right, so that is AMD. Let's take a look at Coin now. Going in alphabetical order here. So this is a little bit of the election rally unwind. Coinbase is very heavily correlated with Bitcoin. Moving down today, it has rallied substantially since the election. Let's see what options traders are doing. just like AMD, selling calls, buying puts. Flow alerts get your attention, signaling significant option activity. And it looks like Coinbase now has made it down to the 295 put wall and broke through the 300 key gamma strike. Key gamma strike 300, 295 put wall. Let's go back to Bookmap. I'm not using price lines on this chart. I don't have it on my chart on a regular basis, so I'm not using price lines to show the levels. Here's the 300 key gamma strike, 295 put wall, and that's where Coinbase may be finding support. All right, that's Coinbase. And next stock, Meta. Oh, did I look at Amazon? No. All right, Amazon. Big rally today. Let's see what options traders are doing in Amazon. Traders are buying calls. That's shown by the rising orange line. Flow alert comes in just after the cash open. Get your attention. Looks like Amazon broke through the 210 call wall key gamma strike, found support around that level, and traders continue to buy calls in Amazon. Back to Bookmap. There's that 210 level support. Amazon rallies up to the liquidity at 215. That was the clear target today. High liquidity, those are limit sell orders in the order book. And typical for a stock, they come in, most come in at the cash open and remain until they're filled. So those are traders that wanted to sell Amazon at 215. Very clear price target. Let's go back, take a look and see what options traders are doing now. So they continue to buy calls, so Amazon may try to move up again. Next stock, Meta. Meta call sellers from the open. Flow alert just after the cash open. Get your attention. Moves down below that 577.50 hedge wall. I talked about that on Monday, I believe. Yeah, that was that level acted as support. Looks like Meta broke through that level a little bit today, but is now up back above that level as traders stopped selling calls, started buying calls. Let's go to Bookmap. Go to Meta. All right, Hector, I've seen you've been typing for about 15, 20 minutes here. I hope if you're typing something really long, I may not be able to answer during my webinar, but I will definitely take a look at it. All right, here's Meta. There's that 577.50 hedge wall. Price did break down below that level. Hector says, thank you, Doug. You're welcome. Elaborating a question on Gamma for later if possible. Sure. Yeah. If it's, again, a lengthy question, I'll be glad to answer it, but may not be able to do so on my webinar. All right, so note that Meta moved down almost to the 575 level. This high liquidity at that level, very clear price target. Looks like absorption at that level. And sellers are exhausted. Buyers come in And remember, just a few minutes later, the call sellers turn to call buyers. Price moves back up above the opening print there. All right, so that's Meta. And then let's wrap up our view of stocks with Tesla, another election trade, also unwinding here. Let's see what options traders have been doing today. Go to Tesla. Tesla today, call sellers and buyers are driving price. Falling orange line, traders selling calls, multiple flow alerts. And this call sellers finally turn into call buyers right around 10:20, 10:25. Note these vertical lines here, these are large block orders, institutional orders, multiple orders selling and buying calls, and finally resolved with call buyers. And looks like all they've really done is kind of stop the move down. Note 340 is the call wall. Price did break down below that level just a few minutes after the open. And right now the call buyers have taken the foot off the gas, and it's again the calls driving price for today. Let's go back and take a look at Bookmap. You can see also there are a lot of aggressive sellers in Tesla by the falling cumulative volume delta, all the magenta volume dots. Tesla found resistance at VWAP, light blue line, as the call buyers took their foot off the gas. Large range of movement in Tesla today. All right, I've got a few minutes left. Does anyone have any questions, any stocks they want me to take a look at? Otherwise, we'll go back to the index charts. All right, so the S&P 500 struggling at this cluster of levels. Did break above the pre-market resistance at this combo 1 level. Oops. But now back down below the 6,000 level. Looks like this was a nice short setup. And large traders are fading this move. They're buying weakness, shown by the rising light blue line, iceberg orders. Let's see what options traders are doing. We'll go back to, I'm going to shift back to total. Go to the index signal. All right, so very timely. Move lower. In the index signal, price follows. Let's do a quick change, puts and calls. That doesn't provide any clarity. Sorry, I'm going to go to the equity signal. All right, so you can see what I mean by the index signal provides a little bit more of a leading indicator. So the index signal started to move lower right around 155. Equity signal really didn't start moving lower until 215. Back to the index signal. Note also even earlier made a lower high. So you know price is trading above the call wall resistance level, also should act as a magnet for price. Price moves back down below that level. Index signal falling. Pull back to the call wall and now moving lower for a nice short scalp there. One other thing that I look at in Bookmap is this market pulse price change indicator. And I like to look at the extremes for entry points, in this case for short. So we know the hero signal for the index was already moving lower right around 155. That's when price started to move lower. There's your first short entry marked by these extremes in the market pulse price change indicator, those bright green areas, and then secondary entry as the S&P 500 broke below the 6,000 level. We know again the index signal was already heading lower. All right, let me check for questions. Single Print Stu says, any suggestions on how much a trader should spend on software? Obviously, everyone wants to develop their edge, but $100 with Bookmap with data, $280 for Spotgamma Alpha package. Has it increased in price? I thought it was right around $250. Yeah, it can obviously add up quickly. Yes, it can be expensive. This is a business. I suggest starting off slowly. If you're interested in Spotgamma, I would start with just the standard subscription, and that will give you the founder's notes, the levels, pretty much everything that I looked at except if you trade futures, the notes and the levels, that's all included with the standard package. With the standard package, you will not get Equity Hub. If you trade futures, you probably may not need that. And then also no Hero or Trace, which certainly adds additional information. But I would say start off with Bookmap, get these standard subscription for Spotgamma, start off with the levels, see if this helps you, see if you're making money, and then you can upgrade your subscription with time. All right, so I hope that helps. All right, Hector, I'll take a look at your question later. All right, single print Stu, that's up to you. Again, I suggest, yeah, certainly Spotgamma is expensive. I suggest starting with a standard subscription. I'm not sure how much that is. All right, everyone, my time is up. I want to thank you very much for watching. Steven says Spotgamma is expensive, but the value is there. But master one tool first, then add more complexity. Exactly what I was saying. Steven says he's mastering Bookmap, then we'll add Spotgamma. All right, everyone, thank you very much for watching. Thanks for your questions and comments. Remember, the rest of the week, PMI data tomorrow, and then Jerome Powell speaking 3 a.m., retail sales data on Friday, and of course the options expiration on Friday as well. Call dominated options expiration. All right, everyone, again, thank you for watching. Thank you very much for your questions and comments. Have a great day. Have a great weekend, and I will see you on Monday. Thanks. Bye.